How to master your trading psychology once and for all. This video will improve your trading psychology. Let's get started. So in this video I will be talking about the nature of the game and how to win, probabilities and edges, realistic expectations and managing drawdowns. By the way, are you enjoying my videos? Subscribe so you don't miss anything. Now let's dive into the first point, the nature of the game and how to win. And I've spoken about it before, but stay with me because later in this video I will talk way more about how to master your psychology, edges and statistics, how they come in play with your trading. But what's the nature of the game? Trading is gambling. It's a game of probabilities. Nothing is certain in trading. So you have to realize that every time you place a trade, you never ever know beforehand what's going to happen. It can be a winner, it can be a loser, it can be a huge winner, it can be a huge loser. The next 10 trades can be all huge losers. And that's the nature of the game. But if we compare it to, for example, going to the casinos, with trading, you can actually put the edge in your favor. I know in the casinos it's possible when you're counting the cards or have a strategy, or for example Edward Thorpe has built a program that he used to beat casinos. It's possible to get an edge in the casinos, but usually the casino has the edge. However, what you can learn from professional gamblers is that they first of all find an edge. Without any edge, they never play the game. And what they do is when the edge is evident, they up their size, and when the edge is gone, they decrease the size. And because of that, they get a positive expectancy. So the nature of the game is uncertainty and finding a model that gives you a positive expectancy. But how does this all work with trading psychology? Now, the first thing, realize that nothing is certain. Everything is probabilities, and later on in this video I will show you the mathematics behind this. So how to win the game? Like I said, you need something that puts the odds in your favor, and then you need to be able to keep trading it even when there's a down period. You need to keep trading the strategy, and then over the long term that positive expectancy will be playing out. Now, what do the numbers look like and how can you use this to improve your psychology?
All right, so the first thing I want to discuss is probability and edges and how the probabilities work in trading. So let's take a look at the sheet. I've showed this before, but stay with me because I'm diving into it way deeper today. So this sheet basically explains, based on your win rate, what the probability is of having X amount of losers within 100 trades. And I would say most people have a win rate in this region. On average, some people are higher. My win rate is in this region. But let's just take the average. So let's say you have a 50% win rate. That means that there's almost an 80% probability you will have 6 losers in a row within your next 100 trades. Now, if you take 1,000 trades per year, or let's say you take 1,000 trades in 5 years, look at this. There is 100% chance you're going to have 7 losers in a row. There's almost 100% chance you're going to have 8 losers in a row. And even 10 losers in a row is highly likely to happen within your next 1,000 trades. So within your trading career, you will probably take 1,000 trades. So this is going to happen. You will have 10 losers in a row. What this doesn't tell you is that if you have, let's say this is your equity curve, you have a loser, you have another one, another one, another one, another one. You have 10 losers in a row. Then you get one winner. Then it's possible to again have like 6 losers in a row or even more within your next 1,000 trades. So, and that's where the 50% win rate. If your win rate is way lower, like these losing streaks, these losing periods can be way, way, way longer. And most people ditch a strategy after it loses 3 or 4 times in a row. They're like, oh, I'm not going to trade this anymore. It doesn't work anymore. While in reality, it's just the numbers playing out. So when you have a strategy that you tested and that works, stick to it, because most people fail because they trade without an edge. And then that small group of people that has an edge, even most people there, will fail because they can't stick to the plan when they are losing. And it's normal to have these drawdowns, these losing periods, and not enough people talk about this. And because of that, people have wrong expectations about what is normal in terms of trading. Now, let's take a different view. This website allows you to simulate equity curves based on your statistics. Now, I've put in some numbers: 10K account, 50% probability of winning, risk reward of 1 to 2. So you risk 1 to make 2, 100 trades. And I want to see 50 different outcomes. So risking 1% a trade. Look at this. So the black line is the average of all the possible outcomes. But if we take a look at the lower ones, these, you can see that just by pure chance, you can have a drawdown that lasts around 70 trades. So you have a positive expectancy, you have a clear edge, you follow your plan, and you have a drawdown for 70 trades, and only then you start making money. This is real, guys. This can happen even with an edge, and this is something most people don't talk about. If we do a few more simulations, you can see it changes, but this is all based on the mathematics, based on the probabilities that you put in. Of course, on average, it makes money, but if you take a look down here, over this 100 trades, 10 losing trades in a row. You also had 11 winners in a row, but maximum 10 losing trades in a row. Can you trade the same strategy after losing 10 times in a row and being in a drawdown for, in this case, 50, 60, sometimes 70 trades? It's really, really, really hard. But that differentiates the loser from the winner. So what I want to drive home with this point is that these are numbers. Numbers don't lie. So if you have a strategy that you know is profitable, that you've proven through back testing and testing and testing, stick to it, even when it's going like shit, because probably when your curve looks like this, you will be like, oh, I'm not going to trade this anymore. And then all of a sudden your winning streak comes along and it looks like this. And then you have a drawdown again, and then you get your winning streak. This is normal behavior. If you have an equity curve that really looks like so smooth like this, often it blows up sometime later in the future. Why? Because this is over optimized, and the more you over optimize, the higher the chance of the edge going away. So it's normal to have a curve that looks choppy like this. It's normal to have these losing periods, and knowing that, knowing the math, should now allow you to stick to your trading plan even if it's going to shit.
So you now know way more about the mathematics of edges, trading, statistics, and probabilities. And this should give you realistic expectations. If you take a look at fund managers, professionals, they have losing weeks, they have losing months, they have losing quarters, and sometimes even losing years. And that doesn't make them shit. It makes them a professional. Why? It's because during those periods they keep executing their edge without mistakes. And if you take a look at the manager that manages the fund or the professional trader over the long run, let's say 10 years, you can see he performs probably pretty well. But if you zoom in on these separate months, then you can see the shit periods. And what I want to drive home here is that it is normal to lose a week. It is normal to lose a month. It is normal to lose a quarter, and even sometimes years. Let that sink in, guys. Strategies go out of sync with the market, and then they go back in sync with the market. That's just how it works. high volatility, some strategy works well, then you have a slower period, strategies might not work well in those periods, then it picks back up again. It's continuously this cycle of getting in sync and out of sync. And your job is to trade your strategy, know when it works, and extract money from it during the periods that it works. So have realistic expectations. It is normal to lose. Stick to your plan and work on ways to improve your strategy when you're having this drawdown, because that will keep you sane, it will keep you productive, and it makes sure that your next drawdown isn't this large. So that brings me to the next point, managing drawdowns. How do you manage a drawdown? What to do when it's really going to shit? And there are a number of things that you can do. Number one is not fuck up. And I don't mean it like that, but discipline is really key during drawdowns. And what you need to be doing is doing things outside of trading that train your discipline and that give you energy. Why? Because trading at that point probably can get a bit stressful if you're having drawdowns and losing trade after losing trade. It can be a bit stressful. So you want to charge your battery outside of trading, and you can do it by going to the gym, hanging out with friends, but keeping your head in good spirits. Next to that, you want to train your discipline. So when you tell yourself tomorrow is leg day, you're going tomorrow to the gym to do leg day. You're not going to be like, oh, I'll be skipping leg day. No, you're going to the gym. And to keep yourself accountable like that really trains your discipline, and the discipline transfers into your trading, and it will help you to stick to your plan during those drawdowns. The next thing you can do in a drawdown to keep your confidence up is to simply look back at your backtested results. Take a look at it. Has it happened before? What happened afterwards if you stick to the plan? Is this a normal drawdown? Did you make mistakes, or is the strategy out of sync with the markets? By thinking about those things, by looking back at the statistics, it should give you confidence. If it has happened before, completely normal. If you take a look at the data I just previously showed you, and it tells you, okay, it is possible to lose 10 times in a row, and right now you've lost 6 times in a row, you've absolutely nothing to worry about. So what you want to do is do everything you can to keep your confidence up. Take a look at the data, take a look at your backtested results. Like I said previously, do things that give you energy. Keep your confidence and discipline up. That's just what you need to do. And other than that, you just have to sit it out. Don't make adjustments to the way you trade in a drawdown. Keep following the plan, because most people will be making adjustments, and that's when they will be fucking up. Because if you make adjustments in a drawdown, are like, oh, I'm scaling out here because I lost the previous trade and I don't want to lose in this one. That's when you dig your hole deeper and deeper. So stick to the plan, build your confidence, build your discipline during those periods. Make sure your head is clear. So the next thing I like to do is meditate. I've been doing this for quite some time right now. And it really gives you this bird's eye view over yourself, over your life, over your emotions, and that really helps you to stay focused as well. So it really, if you do meditation for quite some time, let's say you do it every morning for 10-15 minutes, after some time you will notice it will be easier to create distance between you and your trading, so between you and your trading results. And because of that distance, it gives you more of a clear view instead of being right in the emotion. So that's another tip I want to give you. Practice meditation in the morning before you go to the charts. 10-15 minutes every day. Again, it builds your discipline up, it creates more clear-headedness, and it will improve your trading. Now, to recap this video, you should have realistic expectations right now. You should know the statistics and things about edges. You should know how to win the game, and you should know how to go through a drawdown. And I've had drawdowns before, of course, I'm a full-time trader, and these things are proven by me for myself that they work. And I've seen many professional traders also use these things. So use them for yourself. These are 4 things that you can do right now to master your trading psychology. If you're still struggling and need help, click the link down below, book a free call with me, and we will go over your problems and we'll make sure we fix them. Thanks for watching. See you in the next video.